Welcome to HSBC Global Viewpoint, the podcast series that brings together business leaders and industry experts to explore the latest global insights, trends, and opportunities. Make sure you're subscribed to stay up to date with new episodes. Thanks for listening, and now on to today's show.
You're listening to the Macro Brief, the podcast that looks at the issues driving financial markets across the globe. This episode was recorded for publication on the 16th of October 2025 by HSBC Global Investment Research. All the disclosures and disclaimers associated with it must be viewed on the link attached to your media player. And remember to like and subscribe to the Macro Brief wherever you get your podcasts.
Hello and welcome to the Macro Brief. I'm your host, Piers Butler. Now, global capital expenditure growth has been accelerating this year, and there's one key sector behind it: technology. Investments in AI and cloud technology are booming. But how much longer can this last? That's what I'm discussing on today's podcast with Sean McLoughlin, Senior Global Industrials Analyst. We'll also be looking at some of the other sectors and regions that are fueling the rebound in capex. So Sean, welcome to the podcast.
Thank you. Great to be here.
So before we get started, give me just a little bit of background on this report that you publish, the Global Capex Monitor, which has the tagline, "Show me the money." So how do you keep track of the money?
Indeed. So this is a periodical we publish once or twice a year. And we pool together the consensus forward estimates for over 12,500 of the world's largest listed companies. So it's about $4 trillion of global capex, more or less. And we break that down by sector and by region to look at insights into what's hot and what's not in terms of global capital expenditure.
So what's the latest key takeaways from this version of the Capex Monitor?
Yeah, so this report is called the Tech Supremacy, and surprise, surprise, as you alluded to, tech is really the runaway growth area. So if we look at the technology sector, we're looking at year-on-year growth of about 24%.
24%?
24%, and that easily outpaces anything else. The next quickest growing sector is utilities at 11%.
Because when I was reading it, I was struck by the sheer scale of it. But is that sucking capex from other sectors, or is there sheer incremental growth?
Well, if we look at absolute dollar numbers, technology, and we if you include Amazon in that as well, because Amazon is technically a retailer, so it goes under another category. But if you add Amazon, then technology accounts for roughly 1 in 2 incremental dollars being spent in 25. Now, is it sucking growth away? If you look at total growth in 25, it's 7.8%. So
how does that compare to last year then?
It's a reacceleration. So last year, so if you go back to COVID, you had a decline, 4% in 2020. Then you had 3 consecutive years of bounce back where you had double-digit growth. Then we saw a fade in 2024 back to 5%, and we're seeing a reacceleration this year up towards 8%. So you could say that half of that 8% is being taken up by technology.
And actually in your report you highlight how there's been a change in the pecking order of the companies that are spending the most.
We have a detailed list of the top individual companies spending most capex in 25, in 26 in the report. And what you can see is clearly a change at the top. So oil and gas companies were the largest category in those top spenders already up to 2019. And if you look at 2025, well, nearly 3/4 of capex among the top spenders is being spent by tech companies.
I just wanted to, again, just in the context of this great report, in the history of doing this report, what has it been, the last 15 years or so?
Yes.
Have you seen other sectors exhibit that sort of sheer boom in investment?
I would say it's hard to find years in which you had 50% of concentration. I mean, that is quite a remarkable data point. What we have seen over the years, of course, we had a very high telecom spend cycle into the dot-com boom. We had a mining cycle in the 2000s. We also had a big shipping cycle in the 2000s. We had an oil and gas cycle in 2013 and 2014, where you could see certainly a concentration to a certain extent of capex spending in those years.
And I guess at the moment, it's hard to get a sense of how long this tech boom cycle is likely to last.
Well, that's the big question in the market, I guess. What is clear is that the hyperscalers have committed to capex spending. And if anything, those capex numbers keep rising. And we're seeing, I think, a broadening pool of capital. We're not going to be able to monitor things like private credit in this report. We're looking at listed equity capital spending, but it's clear that there is no shortage today of capital going into AI.
So let's get a bit more granular and look at individual sector trends. Oil and gas is obviously seeing growth, but how big a factor historically has the oil price been? I guess I'm asking the question bearing in mind that sometimes it takes years to develop an oil field. So oil companies having to take a long-term view irrespective of the cycle?
Yes, I think oil and gas spending is oil price dependent. For instance, we look at shale in the US, which has a $60 oil price as a barrier, if you like. So if oil price falls sub 60, then there's a threat certainly to new shale investment. And I think, yes, in a very high oil price environment, that has tended to favor, let's say, some of the riskier investments, maybe new subsea, and a low oil price tends to defer some of that. So that there is a broad correlation.
And at the current level, what are we seeing?
Well, we're looking at the moment at low growth in oil and gas next year at the current oil price.
What about chemicals? I mean, that according to your report, has been in the doldrums since 2022. Any signs of bottoming out there?
I would say no. If anything, it's one of the sectors that has, I think, some of the clearest numbers. So we're looking at a 6% decline in capex expectations in 25 and another 5% decline in 26. So it's a sector that I think is very visibly not seeing any kind of recovery.
Still very much in the doldrums. And transport, I guess one of the big components in transports is shipping, but are there any other factors?
Yes, we are probably at the tail end of a pretty meaningful cycle on the commercial side of shipping.
Which was kind of COVID related, wasn't it?
Which was definitely COVID related. And we are certainly still in an LNG upcycle. So again, a lot of moving parts in the maritime industry, but it looks as though we're seeing minor capex growth. Airlines is still showing good upcycle.
Everybody wants to travel, don't they?
And road haulage is less exciting.
You mentioned utilities as well at the start of the conversation. Is utilities being impacted by technology in the sense that that's driving a significant demand for electricity?
Well, the way that we break down the utility segment, roughly 3/4 is electrical utilities. So we see this broadly as a sign of the push on electrification. In other words, it's the need to invest in renewables. It's also a need to invest in grids to integrate renewables. And now, obviously, you have the AI data center power consumption kicker that, again, is also driving a lot of utility investment.
Is there likely to be some capacity constraint in the sense that this boom in AI and the demand for electricity has taken us all by surprise in a way, and it takes a while to build power stations? And I mean, we've seen examples of some of these AI companies trying to secure dedicated sources of electricity supply, nuclear power stations and what have you. Is there going to be a bit of a bottleneck in that respect?
I think as the capex numbers increase and the speed of that capex remains high, then yes, I think there's an increasing risk of physical bottlenecks, be it the availability of power equipment, be it grid connections, be it other areas of equipment. And I think the market is kind of chasing some of these bottlenecks.
In your report, you say that there could be upside potential to your capex forecasts. Remind us what you're going for broadly. And is that really because you think this tech supremacy is only just getting going?
To an extent, yes. 2026, the initial view is that we're only looking at 1.6% global growth.
Even to me, that seems a little bit on the low side.
That is already concentrated really in one sector, and that is technology, up 9.5%. We're seeing declines in construction, in process. We're seeing declines in EMEA and in Asia Pacific. So it's concentrated in tech and it's concentrated in the Americas.
You mentioned a couple of regional differences. Any other big regional messages coming out of the survey?
The other clear message, I guess, is on China. So China continues to be in a capex negative moment. Negative this year, continuing negative next year. And again, a big component of that is the construction sector unwind. So
this is the legacy of having. There were obviously some years, I bet, in your report where China was kind of leading the way, but it's a sort of legacy of having had so much investment in the construction now. Property cycle sort of slowing down. That is having an impact in the overall statistics. Yes, again, the aftermath of another cycle. So, Sean, you go and talk to companies in terms of writing your reports and what have you. I mean, do you sense there's a sense of optimism associated with capex, or are they still cautious because it has been a difficult past few years? I'd say it's a mixed picture. There's clearly optimism around anything that is AI related, and that spreads across a fair few sectors. Now, certainly we had a lot of optimism earlier this year in Germany that was dragging, I think, a lot of positive views on Europe. That looks to be, I think, maybe less positive now. Is that because when you talk about capex, it's one thing to have the intention, but to actually put it into reality is a lot harder? Yes, and ultimately, I think going from policy ambition to actual dollars spent in the ground is there is a lag. We see this, for example, in the US data. We've seen a lot of the Biden era policies were introduced in 21, 22, and we really saw in 23 and 24 construction dollars coming significantly up. That has been a fascinating insight into the capex cycle. Show me the money, as they say. We'll have you back to see what actually turned out. Sean, thank you very much. Thank you, Piers. A couple of key reports from the Global Investment Research Team to bring to your attention now. In the October edition of the Currency Outlook, Paul McLoughlin and team look at the prospects for the US dollar. And in the latest HSBC Global Macro Strategist, McLoughlin brings together the top themes and our best ideas across key asset classes and geographies. This month, the focus is on the US growth outlook, global fiscal vulnerabilities, and the ascendancy of emerging markets. For more information on those reports or for any other questions, please email us at artsresearch@hsbc.com. And don't forget to like and subscribe to the Macro Brief wherever you get your podcasts. And please also check out our sister podcast, Under the Banyan Tree, where hosts Fred Newman and Harold van der Linde put Asian markets and economics into context. So that's it from us this week. From all of us here, thanks for listening, and please join us again next week on the Macro Brief.
Thank you for joining us at HSBC Global Viewpoint. We hope you enjoyed the discussion. Make sure you're subscribed to stay up to date with new episodes.